Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And yes, I'm still coming from my cruise here to you guys, giving you all the insights. And I'll tell you, for being on a cruise on vacation yesterday was an intense day for me as I was keeping on top of trades, giving trades, taking profits on various short positions. It was a beautiful day, but also a very bloody day for Wall Street. Now, we're going to dissect this, right? Because you can't say that I haven't been giving you the heads up in this game plan that something was lurking. Whether it was the NASDAQ hitting its parallel max high, right? We talked about that. We'll look at that chart. Whether it was Bitcoin hitting 107 to 108,000 and coexisting with that high. Whether it was investor money being at the lowest level in history in terms of how much money is on the sidelines, or if even it was things like you look at bullish sentiment into 2025 that was at its highest point ever. So many signals. In fact, even more than I'm not even discussing. I actually should give a shout out to Drew, one of my head traders, who's the cycle guy in the office. He gave that cycle date of December 15th, and we just passed it. I even said to you guys, this is the beginning of a change in character. I think we can all assume that that was one of the little breadcrumbs yesterday with that massive market sell that, again, told us something was lurking. All right, so let's get into the charts here. Let's go right into it. The S&P yesterday on the back of the Fed decision, massive drop. Now, many people are kind of sitting here and saying, well, yeah, they cut 25 basis points. What's the big deal, right? That's what the market expected. Yes, but if you have been following along in what I've been saying to you guys, right? We've been talking about how the markets knew that 25 basis point rate cut was going to come, but it was what was going to be said after that. What's their projections? And one of the things Jerome Powell said is that he's worried about inflation all of a sudden, right? So again, this is something that I've been alerting to you guys nonstop in these game plans, that inflation is upticking, whether it's looking at the price of home insurance or car insurance or rent, or even home prices that are still relatively sticky, although starting to come down, or even food prices. Cocoa. Look at cocoa's chart. That's an insane chart. Straight vertical up. There is inflation out there, and it's bubbling up again. Jerome Powell even called out the S&P, which is something I've talked about. I said, guys, as long as the wealth effect is continuing, okay, as long as we're seeing people looking at their 401ks and being like, wow, the market's just made a new all-time high, just made another 10K this month, you're not going to get inflation to come down. You can't have a wealth effect that keeps making people so wealthy and then not expect them to feel good enough to go spend money. So what is he saying? He's saying he's going to have to force a recession. He called out the S&P and said we need the S&P essentially to come down, and that is a warning shot across the bow. All right, back to the charts we go here. So what are we seeing this morning? We are seeing a small bounce on the S&P 500. This again was yesterday's fall on the Federal Reserve on the 10-minute chart. This is where we closed. We went down a little bit after hours on Micron earnings. We'll look at that chart in just a second, and then we have floated back to the upside. Now, if we flip over to the S&P, let's look at what damage was done on a technical basis. This is remarkable, by the way, guys. Look at this low pivot here. This is, again, October of 2023. And I've shown this so many times in the last month, this chart. And I said, guys, this is a warning sign. You bounced, broke down, retraced. And then the question was, were we going to go up one more time and tag this level here or not? And we clearly see not at this point. Now, when you get a wide range red candle like this of this magnitude and it wipes out all of these up days over here, it does massive technical damage to the chart. So not only did we break a trend line here, right? Pivot low here from August. By the way, this is your August swoon low. We've now broken that upsloping trend line here. But essentially now it goes into a mode where unless the S&P can close above the red portion of the candle, which is all the way back at around 6,050, all right, if it can't do that, everything inside of this is bearish. More bearish if you stay below this trend line right here. By the way, guys, remember my target on the S&P that I was giving out in the game plan? It was at 6,100. Look at the high on the S&P. All right, now even I was doubting. I was like, oh, well, it's the holidays. Christmas and New Year's on Wednesday of each week, which kills both weeks. Maybe we will float up here. We even talked about that yesterday in the game plan, and I was even kind of like, oh, well, maybe we'll just go a little higher, even though the market should be done here based on the cycle date, based on the target price hit, based on the NASDAQ, all of these factors. Even I was kind of starting to waver there just a tiny bit, but no, the markets are the markets, the charts are the charts, and this is why technical analysis and cycle analysis needs to be part of every single person's investment analysis. Right now, again, what I'm looking for here is very clear, right? So we're getting a little bounce here. We did hit technical support. So if we look here, you can see that the S&P, we came right into this level. There is some support here, which makes sense why we're getting a bounce, pivot high, pivot low right here. We went right into it. But look for something like this, and then your next move to the downside. Don't even be surprised if we rally back to what I would call the scene of the crime right up here before that next big move down. The reason I say that is because by the dippers, it's been programmed. So there's money, even though there's less money on the sidelines than ever before, there's still trillions. I mean, again, it's just percentage basis, right? So there's a percentage wise, it's less than ever before, but it's still trillions of dollars. So there's still money to come in the markets potentially. So we could go back to this 6,000, just above, I guess this would be around 6,010 or so. And then that next roller you would anticipate coming in. But this is monumental. That sell yesterday was eye-opening, and I think it caught a lot of people off guard. Not us here, folks, as again, we were looking at a market that was basically ready to see selling pressure. It was just a matter of was it going to be before the holidays or after the holidays. And by the way, analysts upgrading left and right the S&P targets. I mean, think about this, right? The S&P 500, we got so many upgrades, upgrades on these other stocks that were already in the stratosphere. I've even talked about the Buffett indicator, right? The Buffett indicator is something that, we've all wondered, well, why is Warren Buffett having more cash on the sidelines, over 300 billion than he's ever had before? Well, because the Buffett indicator, what he uses was two standard deviations above the norm. We've talked about charts that have shown us being as elevated in a bubble as the dot-com era. So these are all signals that if you put the breadcrumbs together, they really put us in a perspective of saying, holy cow, you know, this market is at a point where it could fall sharply at any time. And yesterday, again, 2.95% on the S&P, over 3% if you take the highs. Because remember, S&P was higher going into that. Now, looking at the NASDAQ here, look at this, the QQQ. COVID low, pivot low here. We broke, came down, retraced, and this is where we got our August sell-off, right? So I think this is so, if for those of you out there that are loving charts like me, this is what you pay attention to, right? Because look at when we hit this line, we got the biggest sell-off since the bear market lows of 2022 in such a short amount of time. I mean, this was the August sell-off right here. Well, guess what? We just hit that exact same trend line again right here, and then look. So again, it's not you're not trying to reinvent the wheel here. All we're trying to do is say, okay, well, this happened before. We've seen that this trend line has been pivotal. Then something should occur here. And again, upsloping trend lines generally don't break up. They get rejected since it's upsloping and price is even more extended up there. And that's what we had. Now, same thing with the NASDAQ, though. Keep an eye. The QQQ, did we hit support? Yeah, right there. So again, same thing. We could get a small bounce. Again, holidays coming up. We got to respect those, even though as of yesterday, we still had that big sell-off. But we could get this little float here and then that breakdown. But I'm in the camp, folks. I think this high is in, and I think the markets are as elevated as we have seen them since the dot-com era, even more than 2007. Not housing, maybe, but even housing, you could argue, maybe it is. Now, lastly, I just want to show this, and we'll get into some other charts and movers today, but this is your NASDAQ composite. So remember, you have the NASDAQ 100, which is the QQQ, this chart, right? This is that chart where the trend line goes back to the COVID lows, but then it cuts through here, all right? And then you have the NASDAQ. So the NASDAQ 100 is 100 stocks. It's heavily, heavily weighted to the mega caps, right? So like over 50% is now eight stocks that are trillion-dollar companies. All right, now you go to the NASDAQ, which is a bigger index. And look, COVID low to bear market low of 2022 here, right here. Drag that parallel up, right? So here's your line. You put in your parallel through those lows. You drag it right up here, right to here, and look at what we just tagged. Boom. And look at the drop. So you see how all the breadcrumbs, all the signals, the cracks kind of all align? I mean, this is amazing stuff on the charts, folks. And again, that's to with the cycle date too. The December 15th cycle date that I gave you guys 2 weeks in advance. I said, watch this period. This is going to be a change in character in the markets. And again, it was just a matter of were we going to see sideways chop into the new year and then the fall, or here the fall and now maybe a little sideways chop, maybe a little more downside. We'll watch. All right. Micron, we talked about Micron chart being decent going into earnings. Again, then you had the big sell off, which just really, you got to wonder if that influenced even a little bit of the perception of Micron earnings. Doesn't matter. As I said yesterday, I don't play earnings, just buying before or shorting before, because if you're wrong, I said this exact same thing yesterday. I said, if you're wrong huge. And sure enough, what did we see on Micron? Massive drop on earnings here. And again, it has bounced back a little bit now in the pre-market, but it is still down sizably. Now, if we flip to the daily chart again, where is the big buy level? What level would we be looking at to potentially be a buy? I have a level here at a Pierce of 85. That'll be a level right here. This is a pivot low zone here. And then you have a gap fill just below at around 81.75. So those would be my two levels if Micron goes lower today that would be in play. Now, again, aside from Micron, it's more just watching these other names. But again, just drawing our attention here to things like Apple, right? If we bring up Apple, look, Apple was also at a pivotal level. Do you guys see how so many of these charts were aligning? High pivot, high pivot, high pivot. There's your sell-off. Now, what about Google or slash Alphabet? And I showed this chart in the game plan many times here. Here's a trend line, high pivot, high pivot, high pivot. And then look at this. You got a topping tail, which is a reversal signal. So here was your hit of the line. Then the next day you actually pierced it, reversed, and then look at that sell off there on Google or Alphabet. So again, so many of these charts, and then you could talk about the insanity on Tesla, right? I mean, Tesla has just gone from essentially a $700 billion market cap company to a essentially $1.5 trillion company in a vertical move. Now, again, parallel, we kissed the parallel. Huge sell off yesterday. Now, again, as of now, this would mark a top. You probably get a retrace somewhere in the 460. I have a big level I'm eyeing around 462 or so. And then you look for that next rollover, eventually upsloping trend lines, guys. Again, heads up on this. Upsloping trend lines, you don't know where they'll break. Maybe it chops in here and could even make new highs. But at some point, upsloping trend lines at this angle break to the downside about 90% of the time. So again, it doesn't mean you still couldn't go like showing this, right? We could always go like this, and then make a new high up to there. But at some point, this breaks to the downside. Again, history, this is history and data. This isn't personal opinion. This is history and data showing us what ultimately comes to fruition. Now, yesterday, the Fed again, and by the way, I haven't even touched on what the Fed said, basically because the mainstream media has probably covered that to death for you guys. But suffice it to say here, if we just quickly talk about this, the Fed came out much more hawkish than anticipated. Yes, they cut 25 basis points, but essentially Jerome Powell, as I said earlier on, he called out the S&P. He said inflation is a concern. He said even they weren't even sure about cutting rates this time. He said only 2 cuts next year and 2 cuts the following year. That's a huge difference from what the markets were anticipating. And again, I've been warning about inflation being sticky, right? And again, for those of you that have followed me for a year, I've talked about, inflation being sticky once it got down to around 3% and then starting to go up. Here we are. So again, these are the things we have to pay attention to and be very aware of. All right, the 10-year yield up again today, coming into resistance. We'll have some resistance right around 4.57 right here. This is that upsloping trend line going back here. If it gets through there, we could be headed to 4.73 right here, and then ultimately our 5% level. I don't think we'll go up there, but anything is possible. If inflation doesn't get under control, anything is possible. The dollar's pulling back a little bit. That's going to help gold. It's going to help, obviously, risk assets a little here. By the way, the Bank of Japan ended up not raising rates, and I think maybe they were spooked by the Fed, but either way, thought that was very interesting. But the dollar again breaking up here. Now, if the dollar can really confirm, the dollar has upside to about 109.65. This little pivot in here, I know it's hard to see, but that would be your resistance level there. Bitcoin today getting a little bounce. Again, my 107 to 108,000 target hit beautifully. and almost a 10% correction off of that. Essentially a $10,000 move, just under 10%. Now this is the line to watch. So right around 98 to 99,000. If we break and confirm below this, you're going to 91 to 92. And if 91, 92 break, you're going to 75. Now again, could we go back up and retest? Absolutely. Inside of the parallel, we could easily rally all the way back up, retest 108, maybe even touch 110. But ultimately, again, upsloping trend line, upsloping channels. This one's not as vertical as the Tesla one, so the odds of it breaking down are a little bit less, but it's still in the 80% range of a breakdown at some point. That's just still high. It's not as high as 90% like the Tesla vertical move, but it's still very, very high. Gold, let's take a look at gold real quick here. If we take a look at gold, gold again getting a little bit of a bounce. Now again, big flush in gold. Remember, gold even during COVID collapsed initially and then rallied back. Now the concern here is that if we confirm below this line, we could be headed to 2,500. But the nice thing about it is not that low. This would be major support right in here. Huge support right around 2450 to 2500. Now the kicker is this, is that if markets go into a bear market, right? If we start to see bear market, money is going to come out of stocks. Well, where's it going to go? It might find a little bit into Bitcoin, but Bitcoin again still a risky asset. Gold is going to be your recipient. So you look to buy gold on weakness. Anything below 2500 I think is a no-brainer. I still think it's over 3000 in 2025 coming into 2025 at some point next year. But again, this will be the kicker here. If we get down to here, a lot of support there. Silver today, silver last I checked was a little on the weaker side, and it still is. Now, why is gold bouncing but silver going down? Well, the essence is very simple, right? So number one, this had a bigger breakdown here, but also you have to remember, guys, silver is much more of an industrial metal now. It's much more of an industrial metal. So if the Fed is going to keep rates higher for longer, they're going to try to slow the economy, maybe a recession to get inflation under control. That is not good for silver. It's not good for copper. It's not good for the other industrial metals. And so you're seeing copper today lower as well, even though gold is bouncing. Gold is the safety play. Copper, silver. Silver is partially a safety play, but not as much as gold. And then obviously copper is going to be down more because that's purely industrial, purely industrial. Always remember that, folks. All right. Let's go to oil here real quick. Remember, oil was consolidating above a key level. It still is. So again, broke above, didn't confirm, confirmed, held the line. So this is still favoring upside move here on oil. Nothing new there. And then lastly on this, folks, is natural gas. And natural gas, let's take a look here. Natural gas is holding this line and rallying up. So again, support, resistance, these are your two levels there. If this breaks, you have a small support here, but then here. And if this high level breaks at 365, my short level is a gap fill here at around 440. So right now, again, and listen, you guys see how cautious I am. I take trades, and then we usually win on natural gas, even though it's known as the Widowmaker, because it is so risky. So I will keep you guys on the radar here. All right, guys, I'm wrapping up here on the game plan on this Thursday morning. Thank you guys so much for being amazing supporters. I hope you guys see the value in the game plans and how we look to the data to give us a heads up. And again, I think that is unbelievably important. So you guys have a wonderful rest of your day. I'll be back later with members. We rocked it yesterday with profits galore in crypto as well as stocks. I'll talk to you then. Take care.